Morning, everybody. It's the 6th of July. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
All okay?
Yeah, all okay here. A little bit wet outside. A
Yeah,
little
it's
bit
miserable,
miserable.
isn't it?
But
Rubbish
yeah,
weather, eh?
markets have moved about a little bit overnight. A little bit of
Yes,
movement out there.
appears to be. Obviously, we'll come on to that shortly when we go through the charts, but just a quick roundup of the headlines. First up, in the UK, Boris Johnson had a speech yesterday, and he thinks that people must learn to live with coronavirus. He announced plans to end social distancing and capacity limits at venues in England from July the 19th. Also, face masks will be made voluntary in all settings, and the government will no longer instruct people to work from home. That means all remaining businesses will be allowed to open, including nightclubs, none of which will be required any proof of vaccination or testing before entry. The final decision is still yet to be confirmed on the 12th, so another 6 days' time. But we're going full steam ahead, and that's despite there being quite a big number of, well, quite a big spike in the number of cases in the UK. So we are. It sounds like Boris has had enough.
Yeah, he's a bit bored now, so he's like thinking, yeah, what am I going to do now? But it's I think he's right. We've got to learn to live with it.
I think everything's in place now, isn't it? In terms of, the schools know what to do.
Yeah,
You know, people know what to do work-wise. You've got the app in place if you need to quarantine for any period of time. So, time to
yeah.
just get on with it, right?
I think so. I mean, they're trying to do it at a time when there's obviously school holidays, so it makes sense in some ways. Obviously, there's a lot of people saying it should wait, should wait, should wait, but the world is not going to wait for us.
No.
So it's just a case of continuing to monitor it. I think that's it. I think that's the end of the lockdowns as we know it now. I can't really see it going back because I think there'll be too many people completely anti it. So if it does go back, I think you'll have riots in the street, which won't be nice.
No,
I
it
won't be rioting. I'll be doing what I'm told. Don't worry about that.
Yeah. So what do we have? 27,000 cases yesterday.
Yeah. What does it do? Does it double every week or something like that?
I don't know, but obviously, more and more people are vaccinated.
We can't see your screen, Joe. Are you showing us? Yeah. Yeah. I think the sort of like everyone's focusing now on hospitalizations, deaths in hospitals, and things like that. So, we
Don't know
continue
if there's a
to.
chart with. I mean, that is a steeper curve. That is than the autumn one.
Mm-hmm. Is that because of the testing is more now than it was?
Don't know. That is
Should really have a number of
parabolic.
tests.
That is a little bit more sort of gradual here. But this is the hospitalizations.
I mean, that's a big difference, isn't it?
That's huge.
That is a massive, deciding factor. So it is good to look. It is good to be a technical analyst sometimes.
We love a chart.
It does. Yeah, it does make you sort of like look for the right type of data. And
so we're on the sort of border there, Steve, of low cases.
Okay. Yeah,
so it must have filter into us.
I've heard of quite a fair few around my area recently. I feel like a bit resilient though since I've had it and I've had the double dose. I'm not running around snogging everyone, don't get me wrong, but yeah, it's sort of like, yeah, I do wonder about the sort of reinfection rates as well. No one really talking about it.
No. Anyway, we've all bored of talking about it, so let's move on to something else. OPEC Plus abandoned its meeting without a deal yesterday, tipping the cartel into a crisis and leaving the oil market facing tight supplies and rising prices, which we'll come on to shortly on the charts and what that means for the oil prices. We did see it tip $80 a barrel yesterday, and that could escalate further. So we'll get Steve's take on that shortly. In terms of the European Central Bank, they're entering the final phase of its biggest strategy review in almost 2 decades, with officials looking to hammer out key differences over future monetary policy. Obviously, there's a lot of easing that's been going on as a result of the coronavirus pandemic, and now we're going to start seeing all these central banks start to maneuver their way out of this situation that they're in, and try and keep the balancing act in place, so we don't cause any sort of major disruptions to, or further disruptions to, the economy. The WM Morrison's takeover saga took another turn on Monday after the buyout firm Apollo Global Management said it's considering making an offer. So it seems to be into a bit of a bidding war, and that's pushing everything higher. Obviously, underpinning risk in the UK markets in general, but of course helping these supermarkets in particular. In terms of the overnight affair in markets, there's been some declines in the Australian market, also in Hong Kong and China. The Nikkei topics provided one area of moderate optimism. So they did okay, but obviously it was a holiday yesterday in the US as well. So we've got those back in the fold today to see what they make of it all. Bullish, no doubt, because that's the only mode they know in the US, isn't it? Just keep buying.
Yeah,
So
pretty sure.
yeah. Right, let's get stuck into some charts then, Steve. Where do you want to start today?
I'll start with the oil, as you just mentioned, pushing towards new highs. And if we look back to October 2018, this is the last time we saw this type of prices. This is WTI crude oil. On my chart here, we've got up to 76.35, push sitting there now. So no real sign of it slowing down. The only caveat I would have for that is we've got this impulsive move higher. This is the fifth wave we're in. I don't expect it to be bigger than the third wave. So there is some sort of cap coming, but it's still got plenty of room on the upside, despite the my prediction that it won't be bigger than the third wave. So if we take the third wave, can we take that candle here? The third wave. So I'm calling a cap around $90 on this move. I think we're going to stall around these levels because we are in need of some sort of correction. Obviously, it's great for the oil producers for the prices to be higher, so it's great for them to sit and argue at our expense. But that's the way that the cookie crumbles. That's the way it goes. Yeah, so I'm really sort of a little bit cautious. Obviously, very overbought here. We can see bearish divergence with stochastics moving lower, prices moving higher. So there is some sort of road bump to come. It'll just be a correction, I think, and plenty of room again to move higher. On the Brent crude side of things, there is a downward trending resistance line. Now, this is a weekly chart, and we've got 1, 2, 3 points. We're hitting a fourth point. So this has been a long time coming. We've talked about this before. 77.66 in here. You say it hits $80 a barrel. That could well be the spot price or the futures price. So as far as we're concerned, we're monitoring this oil Brent price. Don't even know where is it from currency.com. Anyway, so the pricing will be different. It will, but again, we're looking at a 5-wave move, impulsive move higher, and it's playing out really nicely. But that seems to be narrowing that spread between Brent crude and WTI crude. Moving on to gold now. Gold had a little bit of a perkier move yesterday. We'll drill down to the shorter term time frames. We still believe we're in a corrective channel. Part of a bullish flag formation, which sees prices going to 2,500, but not very soon. We're sort of like looking at the end of next year potentially for that. Although I won't hang my hat on the timing of it. On the daily chart, we looked at the 1797, 1800 level as resistance. We've powered through that this morning. So really looking to hold above this psychological level 1800 and the technical level 1797 to see price action move a lot higher. Obviously, we've got the dollar stronger as well, so this is sort of going against the dollar price action, but we can see the momentum has really stalled over the past 10 days, and now we're exploding higher. I did a talking bull buy trade idea in silver. I think I just preempted it. I was a little bit early. We can look at it. This is it on the 4-hour chart. Double bottom formation formed. We had a swing back, didn't quite get down to 26.28. I got in a bit early yesterday, 26.57. We're pushing above it now. I might do that again and stick with that, especially with gold looking quite perky. Looking at the indices, let's have a little look at indices. Again, same old, still looking pretty strong from that point of view. Obviously, strong dollar helps the FTSE. A lot of the companies in there do have their profits in dollars, so it's all a good thing. We've got the this resistance level 71.68. The real level would be the 16th of June high, coming in at 72.18. Doesn't seem to be any reason why we shouldn't at least retest that. We've had a little bit of a spike in the last hour or so. It's a normal spike we get around about the 8 o'clock open. Had a little bit of a sell-off, but rejected that and is moving higher. So on the weekly chart, we're still in some sort of ending wedge formation, but really the highs back from last year, early last year, seem to be a target of some sort. We're above the 78.6 fib retracement. Normally it does just kick on after that. Can't really give a wave count on this, more of a corrective rather than an impulsive move, so bear that in mind. DAX is hammering it higher, bit of an expanding wedge formation in here. Not really a pretty chart to look at. So let's drill down to the shorter term time frames. The daily chart, this ending wedge, we broke below it, we're still below it. It's retesting it again. So potential for this to be capped around about 15,800. Again, as we see in the last hour or so, we've had a little bit of a down move, but we should come roaring back when the US giants wake up this afternoon and start to buy. All-time highs again, same old in the Nasdaq, 14,740, and just pausing for a little bit of a breather while we all catch our breath in the European session before US come in this afternoon, and S&Ps as well, all-time highs. So all looking pretty rosy over there, across the sea. 4,357. No one cares about higher interest rates by the looks of things. No one cares about inflation. Just let's carry on buying it with our children's money. Did I do cryptos? I haven't done cryptos yet, have I? Let's have a look at cryptos. Bitcoin, I've done a video on this. You can find it on YouTube and the other channels. Interesting one for me this week. Last week we talked about the potential for a break higher after breaking resistance at 35,100. We didn't, it failed, and we saw this swing move lower, supported by the Ichimoku cloud, which is one of my favorite indicators. Tried again to break higher, again rejected. So I don't know, I still feel there seems to be a distinct lack of underlying buying interest in Bitcoin, but it is maintaining its levels. So but I just feel that we're getting these lower highs. There is potential for a washout below 28,788. That was the spike low there. We got a really nice support coming in just around about 30,000 and 31,000, and obviously we're building these interim supports at 32.5 and 33,200. If we do manage to break above the 36,000 level, it opens up a move to the upside. But again, we have another hurdle in the shape of 36,650. But really, for me, 41,000 is the real test. There's a 43,000 level above it and 46,000 above that. So yeah, just really not really been able to kick on. I looked at Ethereum as well. That's formed a double bottom formation, and it smashed the measured move target to the pip. So that's really nice when you see things like Ethereum trading really technically. We had hit the target, had a bit of a retracement, held at support at just below 2,200, and has pushed higher again. Looks like we could be retesting the 2,400 resistance in Ethereum. Ripple, similar sorts of price action, obviously in there. They all tend to follow the Bitcoin price action. Support coming in at 63.80, resistance at 70.60 before more solid resistance at 73.30. And Cardano seems to be outperforming all of those, just holding above resistance. That has now turned into support. So for me, around about the 140 level is support. 137.75 would be careful, and really looking to target the swing high where we saw this evening doji star formation, which still controls the move at the moment. That comes in at 150. So really need to see prices close above 150 on a daily basis for this to really sort of get the interest on the bull side of things. But there seems to be something, I don't know, it just feels like a bit of a crypto drag factor at the moment.
Seems that way, doesn't it? It seems to be a few headlines knocking around in terms of whales moving decent chunks of it around, but ultimately it's not going anywhere. So I've found a little bit of an equilibrium, it would seem, at the moment. Awaiting, I guess, another headline or for more
another
buyers
headline.
and sellers to step in.
Yeah, I mean, it could be go either way, couldn't it? You're getting a lot of the governments just trying to ban them, trying to ban the trading of them, trying to create their own cryptocurrencies. So
our PR team, Meredith, sent us an interesting article over the weekend about the unregulated nature of it and people getting ripped off, and it doesn't make good reading, does it? We all know that there's risks involved. If you're not trading with regulated entities, you've got no protection, and unfortunately, where there is that, there'll always be people that are, sharks that'll be after your money, and they'll do anything to get it. So it's going to take a long while for it to shrug that off, I think.
Yeah, it'll dent the confidence, obviously, but it just seems to be getting more and more headlines like that. I don't know. It just feels like what's going to be the good news? A tweet from Musk or something like that. But I think they'd be short-lived. I think you could get a reaction of it. I think it'd be short-lived.
Personally, I still think it's due another washout because I don't think there's enough pain. As horrible as that sounds, bottoms occur when there's maximum pain, and there is obviously a massive amount of retail participation in cryptocurrency. And until there is a mass flush out, I can't see it really sort of beginning to rise again. I may be wrong. We'll have to wait and see. Okay, dollar index. So onto FX now. As Steve mentioned, this has been quite strong of late. We did post quite a nasty looking outside candle on the 2nd of July, and we saw a doji yesterday, and maybe a bit of the early stages of a sort of hammer type candle forming today. We were certainly well off the lows of the session. And just looking around at some of the currencies at the moment, a few on an intraday basis have already reached their sort of average true range for the last 20 days. So there's been a reasonable amount of volatility already this morning. I'm just wondering whether or not a few of these are sort of reaching points where they could be ready for a reversal, maybe. They certainly are just counter trend rallies by the looks of things, and I'll come on to a couple of examples of this at the moment. But overall, I still think dollar index looks poised to move higher. It's broken through this downtrend, which you can see is the blue line. We have had a little bit of a pullback towards 91.43, but ultimately I think we're heading towards that 93 level, and above that to 93.43, which on the longer term charts completes quite an impressive double bottom pattern. And then targets a much higher move to the upside. So this is the weekly chart. Obviously, nothing too concerning on the candle front there. Certainly not as worrying as that engulfing candle we posted on the 2nd of July. So the bigger picture still looks, I think, quite good, but obviously will look much better if it breaks above this 93.43 level, completing this potential double bottom setup. So over to euro dollar. And just looking at that on the daily chart, the interesting move today. We did move higher, but we've given that all up and just about to tip into the red on the session, despite this real big reversal that we saw on the 2nd of July. This support that seems to be doing a job at 118.47 looks set to come under a bit of pressure today. And if that breaks, on a closing basis, then I think we are getting ever closer to completing this potential head and shoulders top pattern that I've drawn on the daily chart. So need to break through that blue line. Then we are faced with the horizontal support at 117.04. And if that gives way, then I think the outlook looks pretty bearish for euro dollar over the short to medium term. Let's have a look at some others quickly. So cable, not really doing an awful lot. Bit range bound, to be totally honest. I think this is the key level here to watch at 136.68. If that breaks, then double top pattern confirmed, and we can look for lower prices. If we look at Aussie US dollar, that's on the front foot this morning. But again, it's one of these incidents where I think that it's maybe a little bit overdone on a short-term basis, and I'll show you why. So this is the head and shoulders top that I've got drawn on the daily chart, and you could argue that the neckline has done a reasonable job of support, although we have seen a couple of closing moves below that support level, and obviously this is trending lower. So I'd be concerned if it takes out this low. I do think this is completed, and therefore I'd be looking to sell into rallies on this one. But if we look at the intraday chart, this is often an indicator I like to use to, I suppose, highlight exhaustion points on an intraday basis. So this is the average true range over the last 20 sessions, from the opening price added on top and then below as well. So if we break out of these ranges, that suggests that we've seen a volatility spike and could be potentially a little bit overdone. So looking at this today, we've had a big move higher on Aussie dollar, and we've gone above the average true range, but then we seem to have been seem to have rejected that. And if we look at sort of resistance, I suppose we could say in and around this kind of level here there is some resistance, and it's pretty much nailed that to the tick. Obviously we've got a bit of a swing high above that, which you could also indicate as resistance as well. But for me, that suggests that the upside is now limited, and I'd be looking, or would have looked, for sell opportunities in and around this kind of region, in line with the previous swing high or resistance, while above the average true range band. So that may be one that is a good one for a short opportunity on a short-term basis. Stop loss is somewhere around here, 76.30. But don't forget, the bigger picture here on the daily chart is this head and shoulders top. So you could be really aggressive with your target and look for this measured move down here at 70.57, which produces pretty spectacular risk reward profiles if you are very tight with your entries. So let's just give you an idea. Stops above these recent highs, which is also above the average true range, looking at about 33 ticks or something like that. And what did I say was the target? It was down at 70.57 is the measured move on that. So I mean, that's pretty crazy risk reward.
Yeah, pretty
nice. If you're patient.
Looks like a good gun to head, Joe.
Yeah, well, I mean, it's not going to get there today.
May not have the time in the day.
No, but potentially 16.5R, and that's the sort of positions you want to get yourself in, where you're looking for those big rewards and looking for that optimal entry point. And I think looking on an intraday basis, using those average true range bands, you can find them occasionally. I mean, that is a 16 to 1 shot. So if you think you put a bet on a sporting event at those odds, the chances are it's not going to win. But if it does, which they can, you've obviously got a massive reward for doing so. So it's similar across the board on a few other assets like that as well. Aussie yen was one that I had drawn out for a potential gun to the head. So this was above the average true range bands, into this kind of band of resistance here. Potentially looking at getting short, targeting a move down to these sort of swing lows around here. So on an intraday basis, that one was quite interesting. But again, it's sort of we've seen a break of the uptrend. You could argue on that one, a little bit messy, but I'd be looking to sell into strength there. What else have we got? Anything else that I highlighted on my charts this morning? I think there was maybe an interesting one on New Zealand dollar, US dollar, although I'm not convinced that's actually completed the top yet. But if we're going to go by what's happened with the Aussie, then you would suggest that maybe that is going to at some point. Just a couple of opportunities on an intraday basis just to mix it up a little bit rather than just looking at these daily charts as I have been over the last few weeks. So hopefully that's given some people a bit of a steer and a few ideas.
Nice
Okay, gun to the head. So yesterday we picked a couple of trade ideas and what did we do? I sold something. What was it? Euro Oz, was it? No, dollar Swiss. I sold dollar Swiss. Not much happening yesterday, so I was down 6 ticks at the close on 0.23R. Similar situation for you, Steve. You bought silver, didn't do an awful lot, 10 ticks offside, 0.33R. So not a disaster by any means, down 0.56R on the day collectively, but hoping we can get back on the horse today with a little bit more excitement maybe in the markets, given that we've seen a decent move in a few assets already, and we've got the US back today as well. So anything you fancy, Steve?
Yeah, I'm going to stick with silver. Tried to buy it yesterday. It's trading just above where I tried to buy it. Getting long here at 26.61. I'm going to have a really tight stop on it. Really, in an ideal world, you'd have your stop all down at maybe below 26.35, with the gun to head and trying to get this trade winning within the day before 9 o'clock. I'm going to go a little bit more aggressive than that. Stops at 26.48.4, and target is 27.11. So it's a little bit above the measured move target of this double bottom formation, but it does feel like there's a little bit of resistance above that. 27.18 is the real resistance, so I might struggle as it approaches $27. But yeah, that's a 4-to-1 risk reward on that trade.
Boom. Okay, I'm going to take a look at Aussie dollar as I just spoke about. Going to go a little bit more aggressive with the stop than I suggested. Ideally, the entry was up at this level here, sort of just in front of 76.00. So I'm going to sell it now at 75.75. I'm going to make a call that I think it's done for the day. Not going to make a new high above that level. So going with a stop at 76.03, and I'm going to target a move to just in front of these swing lows down here at 74.55. So looking for a decent 4.5R on that one on an intraday basis. So quite fancy that one today.
Excellent, nice one.
So what's going to move markets today in terms of the day ahead? We have got German ZEW at 10 a.m. The economic sentiment index is expected to fall to 75.2. Obviously, keep an eye on your euro crosses if you've got any around that time. Then 3 p.m. we've got US ISM non-manufacturing PMI. The index is expected to fall to 63. So keep an eye on anything related to US come 3 o'clock today. Obviously, US back today after the national holiday yesterday. Other than that, we've got obviously the ongoing wranglings with OPEC Plus. So enough again to keep us interested for the day ahead. Anything else, Steve?
No, that's it. Good luck,
Lovely.
everyone.
Yeah. Cheers, guys. Have a good day. We'll be back tomorrow.